So, Andrea, converting a non-deductible traditional IRA into a Roth IRA will bring with it some substantial advantages. As we know, a Roth IRA, you can actually grow that money tax-free, and you can also take that money out on the back end tax-free. Also, you don't have to worry about required minimum distributions when it comes to a Roth IRA as well. But when you're talking about converting a traditional IRA, a non-deductible traditional IRA to a Roth IRA, there is one caveat that you must be aware of, and that is the pro-rata rule. And so we're going to talk about that. And it's a really little spooky rule the IRS came up with to confuse everybody, but we're going to try to make it a little bit more clear for those of you that are tuning in today. So let's go ahead and get started. Hi, my name is Carson Graves, President and CEO of the Retirement Education Center.
And my name is Andrea, Director of Operations at the Retirement Education Center. And the reason we've created these educational videos is to help to make the difficult and stressful process of retirement income planning simple.
Yes, and we do this, as we always let you know, with a team of advisors, ranging from certified financial planners, certified financial analysts, insurance advisors, estate attorneys, and other needed professionals to help us build a written retirement plan that's going to let our clients know when, where, and how to take money from their retirement savings.
For the best retirement income planning advice, please subscribe to our YouTube channel and hit the notification bell to be notified when we upload new videos.
So we've actually spoken a lot about Roth IRAs in our videos, but I can tell you, Andrew, that there's nothing more confusing about this subject matter than what is known as the pro-rata rule. So we're going to try our best to clear this up for those of you who are tuning in to this video today, because it's really, really important when it comes to you taking a traditional IRA and converting that into a Roth IRA. So before we get into all of that, there are two rules that we're going to give you that you should know by now. But Andrew, what are those two rules?
Sure. Rule number 1 is to never run out of money. And rule number 2 is to never forget rule number 1.
Exactly. So let's talk about this pro-rata rule and how to navigate it. So now let's discuss this really interesting rule known as the pro-rata rule as it pertains to an IRA being converted to a Roth IRA. So as you know, this can be a very confusing rule, and you're going to definitely want to make sure that you understand how it may pertain to you when you're deciding to convert your IRA to a Roth IRA. So first of all, it is important to understand that when you're doing conversions, all of your IRAs are going to be treated as one IRA for your conversion account. So this includes any SEP IRAs or even simple IRAs, but any type of IRAs is going to be basically considered as one IRA when it comes to converting any type of IRA to a Roth. You cannot segregate the after-tax contributions. As nice as that would be, of course, the IRS came up with this nice pro-rata rule that does not allow for segregating any type of after-tax contributions. And we're going to dive into that so you can understand what that means a little bit better. So let's take a look at this here. So let's say you have a traditional IRA. It's valued at $100,000. And then maybe you have a simple or SEP IRA, and it's valued at $40,000. And then you have this ancillary non-deductible IRA that you've funded, and it's actually worth $10,000. So in the IRS eyes, you have $150,000 of total IRA money here. So you have $100,000, the $40,000, and the $10,000. Now you're going to want to convert maybe this non-deductible IRA into a Roth IRA, and hence the pro-rata rule will prevail. So let's look at a few examples here. So example 1, let's say you have your total IRA balance of $150,000. You're going to want to convert that $10,000 non-deductible IRA. And so here's how they're going to look at that. You're going to have to take that $10,000 and divide it into that $150,000 total IRA balance. And when you do that conversion, only 6.7% of that conversion is going to be tax-free, or roughly $670. Unfortunately, $9,330 of that conversion is going to be taxable income to you. And in our second example, it is also notable to understand that the way the IRS look at your IRA balance, they don't look at this until the end of the year. So let's say you did this conversion in April, and then at the end of the year, your IRA balances had grown to $155,000. Well, unfortunately, that $10,000 now needs to be divided into the $155,000. And so now only $650 of that conversion is going to be considered tax-free. So let's move on and take a look at a third example here. So let's now take a look that you have a traditional IRA, it's $100,000, but in that traditional IRA, $20,000 of it was funded with after-tax contributions. And you still have your $40,000 simple or SEP IRA, and you still have your ancillary $10,000 IRA that was also contributed with after-tax contributions. So you still have a total of $150,000 of total IRA money. So if we're taking a look at our last example here, you still have your total IRA balance of $150,000, but now we have $30,000 of after-tax contributions that we're going to have to consider. As we mentioned before, you cannot segregate any after-tax contributions. And so now we have $30,000 going into $150,000 of IRA money, which is 20%. And so now you definitely get a little bit more of a break because you have more after-tax contributions that's being considered. So now $2,000 of that $10,000 IRA to a Roth conversion is going to now be tax-free, leaving $8,000 to be taxable income to you. So I hope that this information was beneficial to you in helping you understand some of the intricacies of the pro-rata rule when it comes to an IRA to a Roth conversion. So if you have any questions or comments, please leave them in the comment section below. And do not forget to subscribe to our channel.
To learn more about our services and how we can help to increase your chances of not outliving your retirement savings, make sure to click on the link in the description below and sign up for our free Maximizing Your Retirement Income Masterclass. After this video, check out our other videos that we've created that will help give you some tips on how to maximize your retirement. Also, if you like this video, please give it a thumbs up, subscribe to our YouTube channel, and share it with a friend. Thanks for watching, and remember, if you have questions,
we have answers.